Traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Great to see you all. We're going to take a look at what is happening today, what the plan for at least today and maybe the early part of the week looks like on this very shortened week with the Monday bank holiday. It's really important to kick off any conversation about the market and what we're going to be dealing with by starting off at the economic calendar. If this is not part of your plan, if this is not a daily part of how you're preparing for the week, let me invite you all to check out forexfactory.com. It's a free calendar. It's a global calendar. Really important to know not only what's happening in terms of U.S. hot zones, but also globally with the overall central bank tightening cycle that's happening. And then if we take a look at what we've got on Tuesday, today, September 6th, ISM Services PMI at the top of the hour, 10 a.m. Eastern. That will be a volatility hot zone event as we wrap up the clearing range. So the idea here is be prepared for sudden bursts of volatility that could trigger trades, but then contract pretty quickly afterwards. And the main idea behind, again, just knowing what's on the calendar is making sure, the reason I look at this, the main reason behind why this is a part of my habit is where it maps to. Where it maps to is my knowing the timing to when volatility events will occur. And I can either protect capital, that could mean exiting before the volatility, knowing where my stop would ideally be around the volatility, or even taking advantage of the volatility, right? So we want to keep an eye on that. That's something that I do every morning, and then I'll do it throughout the day. And then normally, where's my trading journal? And then normally the red hot zones I'll put in my trading journal. So I've got it written down like I would anything else, like an appointment that I would keep in a planner. And it's literally a planner. I mean, I have a planner for life and I have a planner for the markets. So it's a little bit of both. All right. So that is where we are in terms of the economic calendar. Let's take a quick look at where we are in terms of the broader averages. Gang, there are a lot of markets that broke their uptrends. Many markets, broader averages, and a lot of the heavily weighted sectors that broke their trends on Jackson Hole Friday. Please remember, and this is very much how my trading has been influenced by a century's worth of wisdom and validity, and that is Dow theory. And Dow theory loosely would say, I'm paraphrasing, respect the trend that was. So if we had an uptrend that has transitioned to chop, in this choppy environment, I'm still going to have a little bit of a bullish bias. Now, there are certain corners of the market that are in uptrend still. XLE is one of them, XOP. So we have energy, oil and gas explorers, the natural gas company stocks. There are a number of uptrends in this market. They're just not heavily weighted sectors related to the indices, because once the indices started to lose the traction for the uptrend, so did things like XLK and XLF and XLY, right? But there are stocks within those corners of the market. So let's crack open XLY, for example, consumer discretionary. There are stocks within them that are relative outperformers. The one that stands out here, bottom right corner, take a look at GM. Another one that stands out, and it's not awesome, but it's hanging in there, would be things like TJ Maxx. I prefer to find a neutral market like TJ Maxx or Lowe's before I prioritize trying to bottom pick a market that's moving lower in a downtrend. So GM is your relative outperforming stock within the chop of XLY. So if you're wondering, are there still trends in this market, gang? Yes, absolutely. We use our trade flags. We use the 8, 13, 21, and 34 EMAs to find those trends. We know, once again, it's an ever receding pool of trends again. And that's okay. That's okay because 80% of our job is watch list building. 20% of our job is actually trading. So if we prioritize what we trade over how we trade it, you can have the best how, you can have the best strategy and all the secret squiggles in the world. But if we're not prioritizing the environment, that's part of the watch list building, then we're already starting, we're already starting off really without the traction that we need. All right, so that is just a quick look at what we're dealing with. So when I get questions about, Raghee, are we still buying the dip? The answer is always yes. I'm always going to be buying the dip. But what is the dip? Dip absolutely is reliant on the underlying environment. So I'm sure we'll get some questions about that. And if you do have any questions, free trading room, and of course, my YouTube channel watchers here, feel free to type them in. Let's kick it off with Off-Road Bear. Good morning. Not much double green. I completely agree. A lot less than we had even, again, pre-Jackson Hole. GM, absolutely. I love it. On the same brain wave. I like it. Wavelength, brave wave. Love it. Manu stands out. Yes. I agree. Both of those would absolutely stand out. And for those of you wondering, those of you on YouTube get the camera view. Not that you need to see me drink my coffee, but no coffee this morning. Already drank 2 giant mugs. I'm having some root today. Good stuff. Not a lot of caffeine, but some blue ginger. You ever heard of blue ginger before? Well, that's what's in here. Not too bad. All right. So I'm preparing for the morning day trades by not over caffeinating. Did I ever tell you all the story? I used to go down to South Beach. There was a trading floor on South Beach. I know, it twists my arm, right? So back in the late 90s, early 2000s, I'd travel around to trading floors. They'd bring me in to help their traders day trade. So I'd sit there and I'd day trade for a week or something with a group of traders, and it's kind of like being a sponsored athlete. It was a lot of fun. So, anyways, down in South Beach, and the owner of the trading floor said, "We've doubled our order tickets." I said, "Wow, the markets are a little tricky right now. I mean, why you doubled your order tickets? Because they make money off the trades." So, what did you do? Are they trading so much better? He goes, "No, I got an espresso machine." Well, Cuban coffee basically is what they'd make. And if you've ever had Cuban coffee, it's practically a narcotic. So more caffeine, more tickets, more trades. Be aware of that. I remember that story well. So yes, which one looks better? I look at both of them. So remember, don't caffeinate, right? Don't over caffeinate. And keep in mind, these are in 2 very different corners of the market, aren't they, Off-Road Bear? So if I think about where Manu, and I'm going to have to look up MANU because off the top of my head, I don't recall at all where this one is in terms of the immediacy of who MANU is trading with. And then we want to look at the underlying ETF that it is most heavily weighted within. Where does that put us? Let's see. Let me check. Let's see. MANU. Nothing. Okay, so you have 2 very different symbols here. I thought Manchester might be in something else. ManU might be in something else. So it's not. It's separate. I mean, it's completely separate. I can't find a single ETF with any kind of reasonable weighting for MANU. So you've got 2 different stocks. I'd keep them both in mind. They're going to allow you to, one, have very little exposure to the broader averages in that it's separate. And then you've got GM, which is part of XLY. So I like both. I can't find anything with any real, I mean, there's some really low volume names. I think Schwab's ESG fund, things like that, but it's pretty separate. So cool way to kick off the morning. Thank you, Off-Road Bear. All right, next up, lots of interest in rate hikes this week. Australia, Canada, Europe, Powell, take a breath, right? Any thoughts? Yes. Every one of the central banks is in their own timeline, right, William? So great observation in terms of the central bank monetary policy that we're dealing with, every one of them is in their own time and in their own uh, within their own timeline of the rate hikes. ECB just started. Bank of England preceded the US. US is on the tail end, right? We know that by December, it's looking more and more likely as the 375 to 400 column is exceeding, or at least getting to 60%. On the way to 80% is when we would consider this sort of quote unquote fully discounted. So 1/4 point more a hike than we have presumed we were going to see for most of the year. Does this plateau in February? It sure does. Are we still plateauing in March? It sure is. So all it looks like now is that the dip that we saw in the broader averages was predominantly, some geopolitics. Let's not forget all the natty gas shenanigans in Europe. But does that really upend the US equity markets? Let's be real, probably not. But geopolitical shenanigans are always going to put more fear in a marketplace, obviously, than greed. So that aside, which has a very temporary effect, the more longer term effect, the more macro effect is we're going to see 1/4 point more hike, 25 basis points, not a lot, but we have to align to that. And aligning to that does mean the equity markets are going to pull back a bit because this is a higher target rate than we presumed we would have seen the prior 8 months of this year. And that's my thought on that, William. Great question. All right, next up, let's see. Natty gas, sure. Let's go take a look at natty. How does natty gas price drop when how does natty gas price drop when Russia supply to EU is cut? So remember, natty gas in the US and natty gas supplied by Russia. Remember, we're looking at a futures contract out of the US. So that's number one. So there are US supply and demand narratives that are separate from the geopolitics of what's going on between Russia and Europe. We have to look at what's happening here. And I like this pullback, to be quite frank. I really like this pullback a lot. I already have an agro position, and I'm going to continue to build this position, frankly, knowing that natty, the nickname for natty, I don't know if y'all know, when I was first introduced to natty, they used to always call it the widowmaker. When you look at natty gas prices and the large swings we can see very suddenly, very wicky candles and volatility, we know what we're trading. We don't call it the widowmaker for nothing. And when I look at this trend, maybe being broken, a broken uptrend is not a downtrend. A broken uptrend is chop with a bullish bias. I'm still bullish. But as far as the narrative between what's happening in Russia and then US, remember, the US supply demand narrative is separate from the Russia supply demand narrative. So yes, geopolitical news will affect US natty gas, but it's not a narrative for this contract. Does that make sense? It's not a narrative for this contract. So I'll see that volatility. But if you noticed, we've seen a lot of volatility that would seem, to what you're observing, I agree, opposite of what the geopolitical narrative would mean. And it just means that there's a disconnect, that's not why natty is moving. And you know what? Oftentimes it's remarkable how a very quick Google News, not web, Google News search can give you a pretty good idea of the narrative that is happening in the US. So let's see. So I'm seeing China, Russia. There's nothing here where I look at, let's see, Europe. So everything that's affecting the psychology of natty gas on the first page of Google News, I want to know what production. There's two things that we need to know in the US. Where is production at? Is it quite strong still? So is the output high in the US? And what type of winter are we expecting? Now, also remember, when you look at natty gas seasonally and you separate from the geopolitics, and I'm going to show you right now, this is the tail end of the pre-winter run-up in natty. So I'm going to show you that really quickly here. So, just remember that when we have seasonality, Winter is not a surprise to anybody. No one's going to say, oh my gosh, it's September. Let's think about winter. We didn't see that coming. Says nobody, right? The run up for winter starts, as you can see here, at the end of June, the beginning of July. And once we get to September, October, November, look at how choppy it is. It's still overall moving higher, but boy, you better take a Dramamine. So that's where we are right now in Natty. All right, great question. So I think we have most of the Natty. I see Jillian had a similar question. Yeah, it's on the same page. So I hope that makes sense. All right, Tesla. Sure. Let's take a look at Tesla. Tesla was one of the few stocks that was clinging to a little bit of strength amid the deeper pullback. One of the things that I did a couple of videos on, the two most important takeaways for Tesla, specific to its narrative and not necessarily its place within the broader indices and its weighting in the broader indices, is this post-split pullback. Got it. Minimally, I start about with an expectation of about 10% from the highs, immediate highs that preceded the split. And we're in that area. Then that was a 31 or 32 point pullback from the August 16 high at 314, called 315. Okay. Pullback, 200 exponential in that area, around that area still. And yeah, I want to be a buyer. We have on Friday, take a look, on the 2nd of September, we took out the high from the 1st of September, completing the minor low pattern. So if you watch the video that I cut on Thursday of last week, where I talked about this pattern, one of my favorites, I look at this pattern more than any others. There's not many patterns I actually do look at. This is probably one of my favorites. The minor low was triggered. So now, as long as we do not exceed the low from Thursday, September 1, as long as we don't break 266, this is a valid trade. And that's where I am right now on Tesla. Yeah, that's the plan. All right, next up is buy the dip. Is buy the dip is never broken. All that happens is trends break, invalidating buy the dip as a strategy. Does that make sense, gang? Buy the dip is not something that I look at the entire market with a broad stroke, right? I don't paint the whole market with this broad brush of I'm going to buy all dips. I buy dips in markets that have trends. And if there's no trend, there's no dip to buy. So buy the dip is never broken. It's just that the markets will sometimes break trends, which is getting stopped out, or they don't have trends, which means buy the dip isn't valid in that corner of the market. So we have to go symbol by symbol. I hope that makes sense. You know, when we look at where we can buy the dip and whether or not there's validity for it, right? Okay, Enduro Mom asks, small caps, can we take a look at the Russell? Sure. So I'll always start with the RTY, and that's the futures. So this is a trend that's broken. So buy the dip is no longer valid. Oversold buys are definitely valid, and that's what I want to combine. And this is what I've taught and mentioned for years. I want to combine a 21K slow stochastic with Darvas levels, or even psychological levels like 1800 on the RTY. If we can hold that 1800 level, and by the way, the level that I want to see hold is really 1797 on RTY, which validates IWM. As long as we can sit in this area and not really gain any traction below 1800, 1797, this is an oversold stochastic. It's a neutral market. I prefer the buy because the trend that preceded the chop was up, right? So that's my take on the Russell there. Hey there, Marla. Apple has a product launch September 7. Is it a market mover? So what I'll recommend, this is what I usually do. I will Google Apple, and what I want to know, and I actually don't know the answer to this. When did they announce this? When was the announcement? Is it today? And I know they're making a bigger watch. So there's a leak I saw this morning they're going to make a bigger watch, which means, you know, people who want a bigger watch, I guess. New leak shows exactly how big the Apple Watch Pro is. All right. I don't know that Apple Watch and a bigger Apple Watch is necessarily a needle mover. Let's see. Yeah, I don't see a lot here that dates too far back. So it'll be a market mover, Marla. I mean, anytime Apple has a product launch, it's going to be a possible market mover. I'd like to see it move higher. That'll carry XLK and the S&P and then the NASDAQ higher, hopefully with it. But nothing here tells me, A, when the initial announcement was made, which does matter because that means it's a little fresher in the news cycle. And I don't see anything that, new AirPods, new AirPod Pro 2. Okay. I don't know what they're going to do to those things, but so far, yeah, Marla, bigger watch and AirPod 2. Is anyone kind of excited about that? Yeah, me neither. I'm with you. But I would definitely keep an eye on it, Marla, because any news could be a reason for the market to rally the stock. I'm with you. I don't see this one as a prolonged one, really. All right, gang. So 9:20. Thank you as always for joining me for Charts and Coffee. I'll see you all tomorrow. Caffeinate and dominate. And thanks as always for all the great questions. All right, gang. Be good to each other.